Yields of the US Treasuries went down on the first day of the week while Wall Street indexes rebounded. Stock investors are in the wait-and-see mood in anticipation of a Jerome Powell's testimony and the US nonfarm payrolls which are due this week. These major events dampen the risk-on mood and trigger higher volatility. The benchmark stock indexes gained more than 1% on Friday. The Nasdaq, which serves as a barometer of the high-tech sector, climbed by almost 2%. The stock market owes its recovery to comments by some Fed's policymakers and declining yields of the US Treasuries. The Dow Jones grew by 387 points or 1.17%. The Nasdaq advanced by a whopping 1.97%. The S&P 500 rose by 1.61% to close at 4,045 points. The major stock indexes traded mixed in the New York pre-market, but they inched up in the early trading hours. The S&P is expected to trade in the intraday corridor between 3,980 and 4,099 points. The stock market finished the highly volatile week with decent results. The S&P halted a 3-week losing streak. The Dow Jones closed in the green for the first time since late January. The economic data released on Friday showed steady demand for services. Besides, US PMIs revealed that business activity in the service sector has been expanding on the back of easing inflation. All 11 sectors of the S&P 500 finished the session with gains. The high-tech and the consumer sectors manifested the strongest performance. The season of corporate reports for the fourth quarter is coming to an end. Almost all companies included in the S&P 500 have presented their records. 7 more are left. According to Refinitiv, the corporate earnings for the fourth quarter surpassed Wall Street consensus in 68% cases. Still, analysts reckon that the aggregate profits of the companies in the S&P could drop by 3.2% in the final quarter from a year ago. Moreover, analysts foresee negative revenues in the annual terms in the first 2 quarters of 2023. As for the corporate news, Apple shares leapt by 3.5% on Friday after Morgan Stanley predicted that the stock could rally by more than 20% this year thanks to subscription fears. Broadcom shares jumped by 5.7% as the chip manufacturer forecast revenue for the second quarter higher than the consensus because increasing investments in artificial intelligence boosted demand for chips. Costco shares fell by 2.1% due to losses in revenue because the high inflation dented consumer demand. In the early morning, the market gave a muted response to China's modest GDP goal of 5% for the whole of 2023, announced on Sunday. Meanwhile, investors cheered the news that yields of US Treasuries had been declining for the second session in a row. Yields of the benchmark 10-year Treasuries went down to 3.93%, 16 points lower than a 2-month high of 4.091% looked on Thursday. The market seems to have reconciled with the scenario of a higher ultimate federal funds rate. Still, investors hope that the US Fed will stick to moderate rate hikes by 25 basis points, but not 50 basis points projected earlier. San Francisco Fed President Mary Daly confirmed on Saturday that interest rates might be increased again at a fast pace by 50 basis points. Fed funds futures remained under pressure on a Monday. The big story of the week is the testimony of a Fed Chairman Jerome Powell on the Capitol Hill. He will present his semi-annual testimony in front of Congress in the 2 coming days. Investors will look for clues for the Fed's agenda for further policy moves in the light of the recent upbeat macroeconomic data and the hot annual CPI, which reinforced expectations of aggressive monetary tightening until the year end. A lot will depend on the employment data for February, which is due on a Friday. Analysts project a modest employment growth with a 200,000 new jobs following a sharp increase of 517,000 jobs in January. Investors had to revise expectations for further rate hikes after the upbeat jobless report. The market is puzzled because employment data and inflation data contradicts each other. In this context, the outcome of the Fed's policy meeting could be unpredictable. Anyway, the stock indexes are set to trade quietly before Powell's testimony. The US stocks could receive a fresh impetus during the New York trade after the publication of industrial orders for January, but the report could be of a secondary importance. Today, Apple shares rose by 1% in the pre-market after Goldman Sachs started coverage on the tech giant with a buy rating. All stocks and shares of Chinese companies listed on the US exchanges went down. Alibaba and PDD holdings slipped by 0.9% and 1.3% respectively amid the news about the forecast of China's tepid economic growth. The US dollar opened a new week cautiously. Its index traded flat before the opening bell, wavering slightly up and down. The US dollar index settled at about 104.50 and the intraday Canada is foreseen between 104.20 and 105 points. And as expected, the index closed with the weekly losses on Friday for the first time since January. The greenback has got stuck for an obvious reason. Traders are sitting on the sidelines of the two crucial events. The market is alert to the Jerome Powell's keynote speech and the nonfarm payrolls report for February. In early February, the government report showed amazingly robust hiring and steady growth of wages, and the strong employment data was well complemented by beyond consumer spending and the business activity, so investors had to admit that the US Central Bank would hardly lower interest rates this year. This series of strong economic data pushed the US dollar up by 2% against major currencies. Currently, the US dollar is confused. On the one hand, it's propped up by the economic data, and on the other hand, it's squeezed by the prospects of the slow pace of rate hikes. Thus, investors are wondering whether Jerome Powell will leave some space for maneuver and expand on disinflation or will open the door to further hawkish policy until investors find the answers to the question. The US dollar is going to trade steadily. At the moment, Fed funds futures suggest a 72% chance of a rate hike by 25 basis points at the Fed's policy meeting in March. The Canadian dollar had bad luck to open a new week. The downgraded target for China's GDP growth affected oil prices, so the commodity-reliant loonie lost ground. And the USD CAD pair rose by 0.23% to trade at 1.3620. The intraday Canada for the instrument is expected between 1.3590 and 1.3650. This trading week is loaded with important events for the loonie, and the Bank of Canada will unveil its policy decision on a Wednesday. Today, investors are anticipating Canada's IVPMI, which will be published after the opening bell. The reading for the last month was 60.1 points, and the consensus suggests a decline to 55.9 points for March. Until then, the Canadian dollar remains under pressure on a falling oil prices. Brent crude futures slipped by 1.2% intraday to trade at $84.75 a barrel, and WTI futures tumbled by 1.5%. Oil prices were shaken by the tepid forecast of China's GDP growth for this year. The expected 5% growth is lower than the Wall Street forecast of a 6% increase, and this factor weakened prospects for the global economic recovery and the energy demand. The doom and gloom in the crypto market spread over to Monday. Digital assets are trading in the red in a sink. Bitcoin sank by another 0.4% intraday to trade at 22,346 points. Ethereum, Solana, Ripple and Litecoin lost from a 0.4 to 1.9% in the pre-market. Cryptocurrencies have been hit by the news from a Silvergate. The crypto lender aroused doubts about the ability to run its business. Its shares plummeted by 98%, and traders kept track of responses from large crypto platforms on the news all weekend. Coinbase halted acceptance and making transactions through Silvergate. Crypto.com also suspended deposits and withdrawals in the US dollars via Silvergate. Gemini, Galaxy backed holdings, Bitstamp and Cycle quickly followed suit. Apart from a chain reaction to another world-big crash of a huge market player, the crypto market is discouraged by a new report on Binance published by the Wall Street Journal. It turns out that Binance and Binance.US have been much more intertwined than the companies have disclosed, mixing staff and finances and sharing the business of buying and selling crypto. Besides, Binance founded its own US-based platform as a shield against watchdogs. Apparently, the information environment does not contribute to the bullish market. Surprisingly, Bitcoin is showing resilience. The token is consolidating between $22,000 and $22,500. A move beyond any of the borders could push the price down to 21,750 or up to 23,250. And that's all for now. We wish you profitable deals. See you on our channel with a new video tomorrow.